All right, so maybe you're thinking about diversifying your portfolio. You're looking for stocks that offer a blend of stability and growth, and maybe even like a little income on the side. With the rise of renewable energy, you might think oil and gas stocks are a thing of the past, right?
Right.
Well, not so fast. Even in a world going green, there are some energy giants that are not only adapting but thriving. And guess what? Warren Buffett is betting on them too. Today we're diving into 3 companies backed by the Oracle of Omaha himself, Occidental Petroleum, Chevron, and Kinder Morgan. Each of these picks offers something unique for the discerning investor, and we're going to unpack exactly why they've caught Buffett's eye.
Yeah, that's right. And it is interesting to see how these companies are strategically positioning themselves for the future. It's not just about riding out the oil and gas wave. It's about making smart moves to stay ahead of the curve.
Okay, let's kick things off with Occidental Petroleum, ticker symbol OXY. Now, Buffett's been steadily increasing his stake in this company, and it's not just because he likes the name. They've been making some bold moves, especially with their expansion in the Permian Basin. We're talking about their acquisition of Crown Rock, which added a whopping 250,000 net acres to their Permian portfolio.
Yeah, that's a significant land grab, giving Occidental a dominant position in one of the most prolific oil fields in the world. And this move wasn't just about expanding acreage. It was about strategically securing high-quality assets that can deliver strong returns for years to come.
Exactly. But here's the thing. Occidental isn't just about aggressive growth. They're also incredibly focused on reducing their debt. In fact, they've managed to slash their debt by nearly 50% since 2020, which is practically unheard of in this industry.
Yeah, that's a crucial point, because debt reduction signals financial stability and a commitment to responsible growth. It's a move that resonates with investors who are looking for long-term value rather than short-term gains. This focus on a healthy balance sheet sets Occidental apart from many of its peers in the energy sector.
Absolutely. And they're doing all this while still offering a respectable dividend yield of 1.8%. It's like they're proving you can have your cake and eat it too.
Yeah.
Growth, stability, and income. Not a bad combination, right?
Yeah, it's a strategy that seems to be working. Occidental is increasing operational efficiency, meaning they're getting more output with less input. They're reinvesting in their core assets, particularly in the Permian Basin where production costs are already low. This disciplined approach makes them well-positioned to generate strong cash flow even if oil prices fluctuate.
Okay, now let's shift gears a little bit and talk about another Warren Buffett favorite, Chevron, ticker symbol CVX. This is a company that's synonymous with stability and consistent profits. They've got a long history of delivering value to shareholders. Yeah. And they're showing no signs of slowing down.
Right, and what's fascinating about Chevron is their focus on capital efficiency. They're masters at what's called capital recycling, which basically means selling off less profitable assets and reinvesting that money into high-growth areas. For example, they recently sold their stake in an Indonesian geothermal project and used those proceeds to fund their Permian Basin expansion and new deepwater projects in the Gulf of Mexico.
So it's like they're constantly fine-tuning their portfolio, making sure they're allocating capital to the projects that will yield the highest returns. That's a smart strategy in any market, but especially in the energy sector where things are constantly evolving.
Precisely. And this focus on efficiency extends to their operations as well. Chevron is known for implementing cost-cutting measures without sacrificing production. They've streamlined their workforce, optimized their supply chain, and leveraged technology to improve drilling efficiency. This all translates to a leaner, more profitable operation.
Yeah, well, all that efficiency must be paying off because Chevron boasts a healthy dividend yield of 4.3%. That's a pretty sweet deal for income-seeking investors.
It is indeed. And while their Q3 earnings dipped slightly due to lower oil prices, their global production actually increased by 7%. They set a new record for output in the Permian Basin. And their acquisition of PDC Energy is expected to further boost their production in the coming years.
Speaking of acquisitions, let's move on to our third company, Kinder Morgan, ticker symbol KMI. Now, this is a company that plays a slightly different game than Occidental and Chevron. They're not focused on oil gas production. They're the pipeline giants of North America.
Right.
We're talking about a vast network of pipelines and terminals that transport natural gas oil and refined products across the continent.
Yeah. Kinder Morgan's business model is all about steady, predictable cash flow. They operate primarily on long-term, fee-based contracts, which means their revenues are less susceptible to fluctuations in commodity prices. Think of them as the toll booth operator on the energy highway. No matter what the price of gas is, they still get paid for moving it from point A to point B.
That sounds like a pretty secure business model, especially in an industry that's known for its volatility. and it looks like their strategy is paying off. Kinder Morgan stock has surged nearly 50% this year, and they offer a juicy dividend yield of 4.7%.
Those are impressive numbers. And they reflect Kinder Morgan's commitment to operational excellence and shareholder value. They've been investing heavily in expanding and modernizing their infrastructure, which has led to significant margin improvement. They're also laser-focused on reducing their debt, which further strengthens their financial position.
So what we're seeing here are three very different companies, all operating within the energy sector, but each with its own unique approach to success. Occidental is the growth-oriented company with a strategic focus on debt reduction. Chevron is the efficiency expert with a knack for capital allocation and steady returns. And Kinder Morgan is the stable, predictable cash flow machine with a vast network of critical infrastructure.
That's a great summary. It is interesting to see how these companies are adapting to the evolving energy landscape. They're not just clinging to the past. They're making strategic moves to ensure their relevance and profitability in a world that's increasingly focused on sustainability and clean energy.
And what's really fascinating is that Warren Buffett, a notoriously savvy investor, sees long-term value in both Occidental and Chevron. That suggests he believes these companies are well-positioned to navigate the energy transition and deliver solid returns for years to come.
Yeah, it really makes you think. Even in an industry facing so much change, there are still opportunities to find companies that align with your investment goals. Absolutely, and what's particularly interesting about these three companies is their approach to the energy transition. Occidental, for example, is investing heavily in carbon capture technology, which could potentially make their oil production carbon neutral. They're even looking at ways to use their expertise in enhanced oil recovery to develop geothermal energy projects.
Wow, that's pretty forward-thinking. So they're not just focused on producing oil, they're actively seeking ways to reduce their environmental impact and position themselves as a leader in the clean energy space.
Exactly. And Chevron is taking a similar approach. They're investing billions in renewable energy projects, including solar, wind, and hydrogen. They're also working on developing biofuels and sustainable aviation fuels. They're essentially hedging their bets, recognizing that the future of energy is likely to be diverse and multifaceted.
It's a smart strategy, diversifying their portfolio to capitalize on both traditional and emerging energy sources. And it seems like Kinder Morgan is also evolving with the times. They're expanding their natural gas infrastructure to accommodate the growing demand for cleaner-burning fuels. They're also exploring opportunities in carbon capture and storage, which could play a significant role in reducing greenhouse gas emissions.
Yeah, it's clear that all three companies are taking the energy transition seriously, and they're making strategic investments to adapt to the changing landscape. But this raises an important question for you, the listener. Which of these companies is best positioned to thrive in the long term?
Yeah. It's a tough question. Each company has its own unique strengths and potential challenges. Occidental is making bold moves in carbon capture and renewable energy, but they also carry a higher level of debt. Chevron is a well-established giant with a strong track record of profitability, but their transition to clean energy might be slower than some investors would like. And Kinder Morgan offers a stable and predictable business model, but their reliance on fossil fuel infrastructure could pose a risk in a rapidly decarbonizing world.
So the answer really depends on your individual investment goals and risk tolerance. Do you prioritize aggressive growth and innovation? Are you looking for steady dividends and a proven track record? Or do you value companies that are leading the charge in sustainability and clean energy?
Those are all important factors to consider, and ultimately comes down to doing your own research, weighing the pros and cons, and making an informed decision based on your individual investment philosophy.
Exactly. There's no one-size-fits-all answer in investing. What works for one person might not work for another. But by taking the time to understand these companies, their strategies, and the evolving energy landscape, you can make investment choices that align with your vision of the future.
Well said. So as you dive deeper into the world of energy stocks, keep these companies in mind. And remember, even in an industry facing disruption and transformation, there are still opportunities to find value growth and a sense of purpose.
Until next time, keep exploring, keep learning, and keep investing in your future.